Hello everyone. Let's jump right into this video's topic, which is sectors. Now, we've talked a lot about the stock market and some of the different aspects like domestic stocks, international stocks, large cap stocks, mid cap stocks, small cap stocks. But now we're going to go a little bit deeper and talk about sectors. The economy is made up of these different sectors or sections. And essentially what they are different business activities throughout the entire economy. I've written 11 sectors here. As you'll see, number 11, real estate, I put an asterisk by it, and I've not put an ETF. The reason for that, and I don't want to confuse anyone, and I won't get too much into it here, the reason for that is a lot of financials, a lot of companies in financials are real estate companies, as well as banking institutions that own a lot of real estate or provide a lot of mortgages, things like that. Over here I've written ETF in red and put one popular ETF by each sector. What an ETF is an exchange traded fund. It's very similar to a mutual fund, except it has daily liquidity, among other things, but I prefer ETFs over mutual funds, generally. Sometimes there will be a really cool mutual fund that gives me the exposure that I like, and I won't be able to find an ETF with that same correlation. So then I'll buy the mutual fund. But usually, if there's an ETF in a mutual fund and they have the same companies in their basket or their portfolio, I'll usually go with the ETF. We'll talk more about ETFs and mutual funds at a later time. But I wanted to go ahead and just give you options to invest in sectors in this video. So let's jump into sectors. So first we have the financial sector. Financials are going to be made up of banks, investment firms, insurance companies, real estate firms, companies that generally their primary business is going to be mortgages, investments, things like that. And they're going to benefit from higher interest rates because when interest rates go up, they can then loan money out in different forms for a higher return on that money. The second sector, and I apologize if you can't read the green very well, but the second sector is utilities. Oh, and for the financial sector, let me backtrack for a second. XLF is the most popular, or one of the most popular financial ETFs, and it's a very good one. Back to utilities. So utilities, its ETF, XLU is the equivalent ETF for utilities. And utilities are going to be your electric companies, your gas companies, power companies, companies that, as you guessed, as you might be guessing, your utilities. If you own a home or you live anywhere, for the most part, you're going to have utility bills. Those are, for the most part, going to fall, those companies are for the most part going to fall under utilities. Don't want to confuse anyone, especially this early in the video, but internet bills, TV bills, those are not in this sector. Those are going to fall down in telecom, wherever that is. Yeah, telecom. We'll get into that. And these utility companies are generally very highly regulated. So if you're an investor in the utility sector, you can expect stable cash flows, generally speaking, and more of a higher dividend in regards to some of the other sectors. Then we have consumer discretionary. Discretionary is long, so I just wrote DISC, but that's discretionary. Consumer discretionary. Now, consumer discretionary and consumer staples are very related. The differences are this. Consumer discretionary are companies that are going to be more dependent on a better economy, more dependent on consumer spending. So the better the economy is, the more money people are going to spend on these things. And we can think of those as retailers, media companies, different companies where people, if they have extra money in their pocket, they're going to go out and spend money. And then we have consumer staples, which are going to be more like food and beverage companies. Companies in this sector are probably not going to have as much, they're not going to feel as much hurt or pain in a recession, because the products that the companies in this sector sell are generally things that people can't live without. Food, water, things like that. And the ETFs for these two, consumer discretionary, we have XLY, and for consumer staples, we have XLP. The next sector, energy. Now, I know up in utilities I said power. Energy is, in this sector, we're talking about companies that generally are most influenced by the price of crude oil or other commodities, even gas, which is why it can be a little confusing with utilities. But companies in energy are going to be your pipeline companies, your refineries, your big oil companies, companies like that. We talked a little bit about MLPs in one video. I don't want you to confuse MLPs with stocks that are in the energy sector. And we can get into that at a later time too, but there is a difference, and it has to do generally with the tax structure. Sets the difference between an MLP and just a normal stock in the energy sector. Next, healthcare. Biotechnology, medical device companies, hospital management companies, things like that are going to be in the healthcare sector of the economy. And the ETF for that is XLV. Next we have industrials. Industrials are going to be, this is one of my favorite sectors, aerospace, manufacturing firms or companies, companies that are making machinery, huge hardware devices, things like that are in industrials. And then we have technology. So technology, we're going to have, software developers. Technology seems to be the sector that most people talk about now. Think about the NASDAQ. Think about your Facebooks of the world, your Apples of the world, your, Microsoft. Technology is these semiconductors. We've had robust growth in the technology sector in my lifetime. So that's probably one of the sectors you're more familiar with, I would imagine. Then we have telecom. Telecom, we spoke about this earlier with when I said I didn't want to confuse you with utilities, but we're all very familiar. Well, you should, whether you know it or not, you're familiar with companies in every one of these sectors. You just might not know it. But with the telecom sector, think about Comcast, Charter, Verizon, AT&T, Sprint, Boost Mobile, T-Mobile. All your internet companies, your cell phone providers. Those are all in the telecom sector. They, I would say, are relatively stable. There's been regulation kind of thrown back and forth, but they're a lot less independent than, say, the utilities sector of the economy. The telecom space has been facing some disruption, but for the most part, I would say they are relatively stable. I say that, but then you think about your Netflix of the world, your Hulus of the world, things like that. Those might affect a certain portion of the telecom space, but if you think about internet service providers, cell phone company, data plan, or cell phone, not the physical devices, but your service for your cell phone. Those have operated relatively undisrupted so far. And then we have materials. Materials, often also called basic materials. This is going to be companies that are involved in mining, extraction of natural resources, people that are mining for gold, mining for silver, mining for rare earths, timber companies that are cutting down trees and building homes, things like that. Those are basic materials. So these are the sector, and I told you I wouldn't get into real estate, but just take note that real estate is here. You can kind of read for that yourself for now until we get into it deeper in discussion. But these are the sectors of the economy. As I mentioned, I've written an ETF for each of the first 10. Each of these sectors, generally speaking, performs better at different points of the business cycle. You have defensive sectors, and those sectors are going to be doing better in recessions. We gave an example of consumer staples. You're going to have other sectors that are performing better when the economy is booming. And those could be at different points along the business cycle, like consumer discretionary, or very early on in the supply chain, something like materials. So this strategy that I'm about to tell you, this sector rotation strategy, it's very easy to execute. It's literally the push of a button, and you can buy or sell different ETFs. But in practice, it's very difficult to execute. And that is because it's very hard to know at exactly what point we are in the business cycle. A lot of people will tell you they know exactly where we are. A lot of people guess. They present their opinion as fact. They even provide evidence. Now, I will say that history does rhyme. I think Mark Twain said that, I think. History does rhyme, but it does not repeat itself. So if you're looking back at previous business cycles, previous strategies that work, I'm not saying that won't work again, but just be careful, because history rhymes, it doesn't repeat. So these are the sectors of the economy. Try sector rotation strategy yourself if you want. Practice. It's kind of fun, frankly. But it's something that, and I should have mentioned this earlier on, this is not a day trading strategy. I'm not a day trader. I'm a value investor. A sector rotation strategy, we're talking about something, you might buy a few of these sector ETFs and hold them for, this isn't really long term, but you might hold them for a year. You might hold them for 6 months. This is not something that you're gonna, buy tomorrow and sell, in a month or 2 months. These cycles can last a long time. You might own some sectors for years, or you might own it forever. It depends on the strategy that you're implementing. But I do want to make it very clear that this is my opinion, but I think a lot of people would agree with me. Day trading is a fool's game. You really ought to buy stocks, ETFs, sectors, sector ETFs, whatever. You really want to buy and hold those and have patience and kind of a long-term view. I really don't think day trading is a good idea. So I'll leave you with that, and see you in the next video.